Good morning, everybody. I just thought I'd give everyone a little bit of an insight into the secret to my success in stock hunting. It's always the size of your weapon that counts the most. And if you look here, you can see this right here is my HGSI or HGS Investor Software scope. You got the tripod for stability during market volatility. A nice long barrel to get high accuracy on your shots. And of course, a big magazine of ideas in your quiver. So that's really how it's done. So, you know, for the first time I'm revealing this, but in any case I think it makes a very appropriate picture for stock hunting. Anyways, getting down to business pretty quickly here. Dr. K is in South Africa in the beautiful metropolis of Cape Town. For any of you who've been there, it's a very beautiful place. And it's summertime down there as opposed to those of us up here in the northern hemisphere experiencing winter currently. Although out here in LA, winter is low 60s and occasional rain hitting you, so not a bad place to be in the wintertime. But as you can see, since the market bottomed last Tuesday, or 2 Tuesdays ago rather, can I just do a quick check? I want to make sure everybody can see my screen and can hear me fine this morning. I see a couple of you are awake. Let's see. Yes, okay, very good. But anyways, you can see we have a V-shaped recovery and you're back at new highs. So you can also see that when you came off the lows on this day, you got this big dark blue kahuna, which is up kahuna, which, well, I've noticed when you get these Vs, generally you'll see a kahuna or the chart will start to go code blue like you did off of these lows here. And here you actually have a kahuna off the lows on 2 Tuesdays ago when you went through the 58 moving average. The market was looking very, very bad at that point. And so we're at new highs. You can see on the NASDAQ we're at a new high. If we go to some of the other indexes, you can see the Dow is at all-time highs. You can see that the S&P 500 is at, well, system's hesitating here a bit. But when it comes up, yeah, you can see that we're also at new highs pretty much all around on the indexes. I think that New York Composite is the only one. Let's see if that's in here. NYC Composite. That's the only one that's not at new highs. So it does give you a little bit of a sense that the rally is, for the most part, not heavily broad, but because New York Composite, which is a broad index, is a little more indicative of what the broader market is doing. If we look at the Russell 2000, though, the small caps are doing well, and you can see the Russell 2000 is way out there to a higher high. It's gotten above the peak here. So you're in a rally. I guess if you're confused, you can call it a uptrend under pressure, but it doesn't look like much of an uptrend under pressure. It looks like an uptrend. If anything, you might be able to say that the downtrend is under pressure. And so I think it just shows how pointless it is trying to label what the market is or isn't and using that label as an all clear sign. Because to me, that's just baloney. That's not how I operate, and that's not how you're going to make money in this market. Because by the time you get a follow-through day, and by the time those who claim to know are telling you that it's all clear to buy stocks, and we may be at the peak of the rally. Who knows if we continue into year-end over the next 3 days. So you got 3 days going into New Year's. Most people are probably more concerned with the martini mixes than what the market's doing, and will probably drift higher. But I don't think you can take anything for granted, and you do have to stick to maintaining tight entry points or seeking to come in on tight entry points, and then you're taking some profits when you have them. So since this is a stock hunting webinar, the primary focus here is stock hunting. So, we take an overview of the indexes. We determine that A, we're in an uptrend. B, it doesn't look like we're exactly topping yet. And C, going into year end, we're probably going to drift higher. That's what I would think. But again, you can't take anything for granted in this market. It's kind of the way it is. Anyways, I want to look at the way I'll start my weekend review is looking at the stocks with composite rating over 85, and I just keep this list, and you can run through it pretty quickly and see what's happening. Let's throw up some of this so we can see the stock names as well. You got AFSI. It started moving. You had a pocket pivot here, but it's come all the way back in. I don't know if this becomes viable back in here. It's underneath the 20-day, but a lot of these stocks have run up and then pulled back to the breakout have been able to turn around. I think probably the most notable one is NOW, so I don't know if that's going to show up, but we'll get to that one later. But you can run through here and you can get a sense of what's going on. These are all the better stocks. You can also look at stocks with an ERG rating over 180, which is sort of a threshold number on HGS Investor. For my purposes, I'll just use this list since this is what I have here. Apple's another one trying to turn. I bought some of this on Friday, but just for a trade, pick up a couple of bucks on it coming off the 20-day moving average. It's running into a lot of selling. I'm not sure whether that is because Apple, as it's moved higher, and sometimes you notice how you'll see stocks sell off real hard out of nowhere, and then they recover and they come back, and you ask yourself, well, what was that selling all about? Sometimes mutual funds in their charters are only allowed to take 2% maximum position or 5% maximum position in a particular stock, and so you see some of these bigger stocks like Apple, I think, comes under pressure every once in a while from this. It becomes a big part of a mutual fund's portfolio, and so they have to dump shares to lighten that up and reallocate to conform to their charters. And so you'll see that from time to time. And my guess is, and I don't know for sure, it's not like I have a hotline into the offices of mutual funds across the globe, ask them what they're buying and selling and why at any given point in time. But I surmise, and also understanding how some of these guys operated from my days advising 600 and some odd institutions that included mutual funds back when I was at O'Neill many years ago. You get a sense of how they need to operate, and so where does the selling come from? And that may be one source. So Apple has been getting hit as it came up to the century mark, but you never violated the 50-day moving average. Now you're back above the 20-day, and I think it brings it into play as something to trade. Maybe it heads back to the highs at the end of the year. So that's something to think about. See, some of the semis have been coming back. ASML, you saw automatic data processing is more related to employment. Baidu's, I thought, was a short. It started to act like a short in here as it broke down through the 50-day when the market was getting hit here, and it's been able to hold up. So really this is now in play. Potentially you'd be watching this for a possible pocket pivot off the moving averages here because it's sitting right above the 50-day. Bank of the Ozarks doesn't really thrill me. Becton Dickinson, hanging in there okay. Biogen. Biogen's been very volatile because it's been moving around with the biotech stocks, which got hit the other day, interestingly, on the news regarding Gilead when Express Scripts said they weren't going to carry their drug, and they're going to the lower price drug, which is produced by AbbVie. And so all of the biotechs got spooked by the idea that insurers are going to be setting the prices or making these guys cut their prices. So they all got hit one day pretty hard. And it shows you, here's a breakout here. It shows you the danger of buying breakouts. So you're probably better off buying it here when it had the ugly duckling look. BitAuto, I think, is probably a short in here. You notice how it's coming up. You got this area of overhead resistance on the left side here, and it's coming up into the 65-day. Notice how it can't close above the 20-day moving average. That's this moving average, a greenish moving average here. Of these three, you have the 20-day, the 65-day exponential, and then the 50-day up on top. Now, it could rally up to the 50-day where it might be shortable, optimally shortable, but it might just give way here because it doesn't seem to be able to want to move higher and hold above the 20-day moving average even as the market goes higher. So you see the cup of handle breakout, it fails, and if we look at this on a weekly chart, here, let's go to, I want to change this to all securities, so we'll pull up everything I want. Here we go. And you can see on a weekly chart that this thing has had quite a move. So you could consider this a late-stage failed base. And with this setting up like as you're really pretty much in a bear flag, and you have a number of areas of resistance. The lows of the handle here, the 200-day is up here. You notice that it's sitting above the 10-week line on the weekly chart, which is interesting. So you might look at, if we go back to the daily chart, see if I can get that up. You might look at a breakdown from the 20-day coinciding with a move on the daily chart, a breakdown through the 20-day on the daily chart coinciding with a move through the 50-day, or the 10-week rather, on the weekly chart. So that's something to keep an eye out for, and it can trigger short sale signal. Alrighty, Let's go back to our daily chart. And we have Black Hawk. Hawk has been moving higher. And I should go back to the idea that we're seeing, Visa has acted well, MasterCard. You've seen Hawk act well. Some of the other credit card type names. I know these guys make temporary credit cards, I guess, whatever you want to call them, where you put the amount on them and then you can charge that up. I know my daughter gets them for gifts sometimes. But in any case, you see this one doing well. And I think that might be one of the drivers behind Apple going higher, because Apple iPay is probably a little bit of a wild card here in terms of how broad it's adopted. And what I'm hearing, I was out to dinner the other night with a bunch of friends, and anecdotally, everybody was talking about how they like the convenience of using Apple Pay. And that might be the next driver for another upside move in Apple. So that's something to keep in mind. The group has been acting well. So that's something to keep in the back of your head as you're watching how Apple trades, for example, and a number of these other stocks. Here's BlackRock. That's an investment management company. REITs have been acting very well. I'm not really, I don't have a grasp on the whole situation with REITs. The hunt for yield, I guess the idea is that interest rates are going to stay low, and so REITs pay pretty large dividends in general, and so they become popular on that basis. You have seen money flow into them, but I don't think it's a group that you're going to make a lot of money on the upside. I could be wrong, but it just doesn't, historically hasn't really been the case, although they have had their moments. You see a breakout here in Cadence. Cambrix doesn't really thrill me. Just flying through. Here's a breakout in CBRE Group, CBG. That's CBLS, I believe it is. It used to be. And they're a real estate firm, and so that's broken out, holding very tight. CDK Global. I like this one because those are Dr. K's initials, CDK, believe it or not. But here's a breakout that sort of fails. I don't know if you want to call this a pocket pivot. Well, I guess I don't know if you'd call this volume down here 4 days ago, if you can see that. It's closing pretty tight, and I think that was triple witching expiration, options expiration. I don't know if this is feasible. But it is sort of an interesting pattern. I tried to break out, maybe premature, maybe something to look at. I see some pretty decent earnings up here, 100% over the next 2 quarters on the estimates, so that might be one to take a look at. They are a computer tech company. So Celgene, again, the breakdown on this Gilead news or the fears in the group the other day, and you rebound off the 50-day moving average. So somebody asked me, I got an email, someone asking me if the biotech group has broken down, and I don't know. They had a bad day on news, but you can't tell yet if they're going to break down. Those questions, again, those crystal ball questions, is the biotech group done? I don't know. I thought the biotech group has been done for several times on the way up, and who the heck knows? But I know some of these stocks are in trouble, such as Gilead, for example. Cognex trying to come up. Cognizant, that's the index for this group. But you can see if you use an index for the group composite rating over 85, it's doing okay. It's not huge performance, but coming out to new highs, and that's confirming that strong stocks are participating in the rally, which I think is constructive. But when it comes down to, for me, is playing individual names and trying to buy them at the right time and trying to think a little bit outside the box. In other words, I'm not interested in an all-clear sign that supposedly a follow-through gives you. And I think the whole follow-through concept is completely out the window. You have to find new ways of gauging a bottom in the market. And I think looking at the stocks and where leading stocks are in terms of their position on the charts as the market starts to get ugly, and what's holding up, keep an eye on what's holding up as the market gets ugly. So, when we saw the market getting whacked, this is one of my favorite names, in fact. And I bought some off of here, and I sold into this move, and I'm looking to buy back down in here on this pullback. But I thought, if you're buying down here around 37, 38, and you get a move up to 43 or so, that's kind of a nice move. You should probably take some and let it set up. But it's setting up. You can see that, and you're starting to go code blue, and I like this name. But when the market was coming down last week on Tuesday, this thing's just sitting here, volume's drying up, it's holding the 50-day on a retest, the top of the prior base. That's the kind of position I'm looking for. And if I start to see things lift, then and the market turns, then I will come in on the long side and jump on these pretty quickly. And I think the faster you are in determining where a bottom might be, in conjunction with where leading stocks might be setting up on pullbacks, you're going to be a lot faster than if you're sitting around with your finger up, well, we'll say your nose, to be nice, waiting for the all clear sign. And so I think that's really the key. So that was one name. Here's DaVita Healthcare. This is one. It's been basing. Notice how it's setting up tight along the 50-day. Got a couple of pocket pivot type signatures here. That's what these blue bars will tell you. And you're starting to turn a little blue. This is sort of interesting, but doesn't really thrill me. I think one of the leading groups here is going to be internet security or cybersecurity names because that is the #1 group right now. And I think going into 2015, I think that's going to continue to be a big theme. And so I think you want to be keying on the group and the names in the group, and I'm going to go through those in a little bit because there are actually a number of stocks within the group, some thick, some thin, some larger cap, some smaller cap, but they all seem to be doing pretty well. And so it catches my eye as a place that I want to be firmly entrenched in on the long side if we get this rally going. Here's this EPAM Systems. Here's your ugly duckling buy point right here. It looks like it's busting the 50-day, but it actually doesn't violate. Now you're back above. Notice on the pullback in here, you get some supporting volume. Starting to turn a little blue. You're going from all this code red stuff, but holding very tight along the 10 days. So you probably want to keep that on your list of stocks to watch. And what our goal here is to generate a list of stocks for you that you can watch for the next week, hopefully longer if things continue to turn. Euronet, this is an interesting name. You have a move back above the moving averages after bouncing off the 50-day. And I think the place to buy was probably down in here, so it's a little bit up here, but it's acting well, getting a lot of good blue color up here. So looking healthy. That looks interesting. Kind of a thin stock, I believe, though. Let me check the volume. Trades 354,000 shares a day, so that's a little bit light for me. But some of you may find something like this interesting. Expedia holds up, surprisingly. Extra Space Storage, never heard of this one. That's a new one. F5 is holding up. Pfizer, Fleetcor. Look at this breakdown. Here's a breakout. You got a cup with handle breakout. You know, of course, IBD's all over it right here, and it fails. And where's the place to buy it when it's breaking down? Probably getting support, I'm going to guess, if we look at the weekly chart. Yeah, getting support right here at the 40-week. A lot of times when you see a stock holding above, you know, pulling back, but it looks like it's holding above the 50-day with some margin here. I'm just getting a message from the GoToWebinar. It says, you may be experiencing degraded audio quality in your recording. Please close any unused internet applications. Okay, I don't know what that means, but I've pretty much shut everything else down. Okay. But in any case, when you see something hold like that, and it's above the 50 days, so you're wondering, you know, that's kind of floating up there. If you look at the weekly chart, you'll notice it's not really. It's floating along some other moving averages. I want to check something here, though. That's correct. Seems a little odd that that moving average is where it is. And I just updated all of this because here's your 200-day here. Why is it showing up? This is a 40-week. Oh, I see what the problem is. Here's your weekly chart. Sorry. Yeah, so you can see it's holding the 10-week moving average here. Somebody's asking, did you import a list of stocks with a composite order over 85? Yeah, you can get that from either IBD, or I actually screen it off of Wanda and keep those lists. Somebody says they joined late, so I'm hoping you are recording this. I am recording it, so don't worry about that. Anyways, let's get back to this because we got a lot to push through, and it's already 20 minutes after the hour. Fleetmatics Group is holding up along the 10-day. So you can see this thing's trying to break out. This might be viable here. I don't know what the earnings look like, but Foot Locker, yeah, it doesn't look so hot. This is Gilead. You can see Gilead has blown apart and rallies back above. You also notice it undercuts this low, so that setup's an undercut and rally. So, you know, everybody wants to short the thing here or on a bounce up to the 200-day, but the thing is this undercut and rally probably means you rally above the line, and maybe you're going to come back and maybe test the underside of this area here, this bear flag, which would be overhead supply. So, but you can see on the short side, especially in this market, when everybody wants to go short and when you think you're going to start shorting everything, and if you've been watching Tesla come down from the 250s and it's at 206 or something, and you're asking us if we know of any other entry points on the short side after stocks come down, 20% or so, you get a sense that it's probably getting a little bit long in the tooth because everybody sees it. The need to sell is getting obvious. Let's see. But you can see just by focusing on a pool of stocks that, in this case, everything with a composite rating over 85, you could focus on every stock with a ERG rating on HCS Investor over 180. And that's a very decent pool of stocks to draw from in terms of your daily and weekly idea list. It's iDreams. Yeah, I like the name, so it seems like something out of Saturday Night Live, but it's kind of ran up and broke down, and I'm not quite sure what they do. Let's see. China engaged in mobile games. Yeah, okay. That makes sense. A lot of these names are flashes in the pan. Infosys, not looking so hot. These are probably the weaker names in the group that you're seeing. Jack Henry, there's a gap up move. It's holding up okay. Jazz, that one's starting to break down. Looks like it might be rallying into the 50-day where maybe this becomes a short as a late-stage base failure. That's a possibility. This has been a squirrely name, though. I have to say I've shorted it a couple of times in the past, and it starts to look like it's going to blow apart, and it doesn't. Curry Green Mountain, and you'll notice some of these names look weak even though the composite rating is over 85, but names can have a high composite rating for a while as they start to break down. So sometimes this also is a good way to pick off leading stocks that are starting to break down. If you look at Green Mountain here, you're basically tracking below the 20-day. This is a 20-day line here running down, and you can see that you're running into resistance there. It's also right around the 65-day exponential, which is this line here. The 50-day is just above it. And it's looking like it's starting to break down after this break, and you can call this a late-stage failed breakout attempt. I guess this would be the breakout attempt here, and you actually are failing from that breakout, and this might be something to keep an eye on the short side. I've tried to short it before, and I can't seem to get a bar on it. Lamb Research, none of these really thrill me. LifeLock. I know some people are talking about LifeLock. It's in a base. It's on the 10-day moving average. If we look at here, we can see that there was a pocket pivot here. This is, right here. So there was a pocket pivot in this 5 days ago. Even though you had a pocket pivot signature here 3 days ago. Let's blow this up so you can get a good look. You see the pocket pivot signature here. It was above the 10-day, but this is actually the pocket pivot. So you come down, you're in a V-shaped position, and it does what a pocket pivot in a V-shaped position will often do, which is pull back down into the moving average. You notice that happened on Wednesday of this past week, and you came down into the 10-day line on light volume. This might be one to keep an eye on. I'll have to put that on make a note of that one and put it on my watch list. Lithium Motors. Yeah, not really in a good position here. LKQ, let's see, nope. Well, back up there. What was that? Manhattan Associates. That's kind of interesting. You had a pocket pivot here. You can see that on the volume signature here. And try to move higher. The market's probably been sitting on this one, and it's sitting right on top of the space. This might be something to keep an eye on. I think it's a thinner stock, though, if I recall. Yeah, 479,000 shares a day it trades. Not really what I like to trade, but for those of you with smaller accounts or who take smaller positions, you wimpy types out there, that might work for you. Nothing really here that's catching my eye as we plop through. Nautilus Group, cup with handle. No reference points, though, in terms of buy points. The 10 days way down there. I don't know what this one is. NetEase. This one's actually hanging along the 10-day. I don't know if this, you actually see a pocket pivot. Let's see. Now, this would be a 5-day pocket pivot right here. And It's holding along the 10-day line, so this actually looks okay. Might be setting up to move higher, but it's also an old name. I tend to like the new merchandise. I mean, you can see how Virgin America, for example, did pretty well this week and outperformed the rest of the airline group, all of which were moving up, but it was outperforming pretty well. I think it was up 26% intraday yesterday from the buy point right at the 10-day line last week, 2 weeks ago, I guess we're getting to. Papa John's Paychecks, Pharmaceuticals, another broken down biotech. You know, if you play the biotechs, that's what you're subject to. You know, when they're running up, it's wonderful, and you can pat yourself on the back for being smart and whatnot. But when they break down, it can be very brutal. And I think the only time I've ever seen anybody lose like 80-90% of their portfolio value is when they were heavily weighted in a biotech, and that was Medivation way back in I don't know, I think earlier, like 2009 or 2010 or something like that. So you got to be careful with it. They're not the types of stocks in general that you can load into and have huge positions. Now, I remember Bill O'Neill had tons of Amgen and biotech way back in, I guess, in the 80s and the 90s when they were having their moves. And I think Amgen and biotech were both having nice moves in the early 90s. And those stocks actually had earnings. And so they're a little more stable than some of these things. There are a lot of high flyers that have no earnings whatsoever, and you have to take that into account. So it's very speculative. You know, people buying into a name like that, it's generally very speculative because there's nothing concrete about a company with a lot of progress and great technologies and all this and amazing science and all this other BS when they've got no earnings. So you can have all the amazing science you want, and longer term I think that just increases your risk as a stock like that moves higher, and you're subject to potential big downside breaks. So something to think about whenever you're playing biotechs, and that also goes on the short side because you don't want to be caught short something that's jacking up in your face on some news, and that can happen frequently even in stocks that look like they're breaking down. We're still going through this. You can see not a lot. Skyworks has been acting well. Yeah, what is that? Let's go back. SolarWinds, trying to hang in there. You notice you had a pocket pivot here, V-shaped pocket pivot. Now you're backing down into the 20-day, I guess, on light volume. Some of that, well, a lot of that is holiday related. So I'd watch, see what this does next week. That's another one perhaps to keep on your watch. The Spirit Airlines, this thing got hammered. Now it's back above the 50-day. You see, violates the 50-day and then turns around and bounces and goes back up above the 10-day and the 20-day and the 50-day. And it's hanging in tight along the 20-day. Its volume's drying up. I wonder if some of these are going to do the ugly duckling thing and just come right back. You've seen that with the rails, the railroad stocks, which got hit pretty hard. Maybe we'll get to a few of those. What minimum daily volume do you prefer? I generally prefer to see 500,000 shares a day or more, like 35 million in daily dollar volume. But a lot of that depends on how a stock trades. You'll find some stocks, you know, $16 stocks that trade 2 million shares a day. Well, that's, you know, a little bit light, about 32 million daily dollar volume. They'll trade pretty well. So I know Taser has been getting a lot more play if we look at the weekly chart. Yeah. Yeah, that was pretty smart. Before I had a daily chart on my weekly chart set up, so it should have been a weekly. But if you see this, notice how you're seeing the volume. You see the volume line. This is the 10-week moving average of volume down here, running along the bottom, the thick black line. And you notice how this is picking up, and pretty sharply. And to me, that's always a sign of a stock that is starting to garner a lot of institutional interest. And I think this thing could be in the earlier phases of a big move. That's my thinking. You know, I got more interested in it as it was coming up above 18 and starting to break out of this formation. There were some pocket pivots down in here, and it's a very tradable stock. I don't own it right now, but I have, and I did buy it off the 10-day. I think some of you were probably in the chat room, and I was buying it in here along the 10-day, and I was telling you so, and the thing took off, and you run up 10% or so, maybe a little more, and you can take profits, let it settle in, and that's worked every time for me. So you know, you can see gap up, Buy the pullback to the 20-day, boom, gaps up, pulls back to the 10-day, buy it again, boom, gaps up, pulls back 10-day, gaps up, and then it just does this over and over again. And so you would conclude then that it's likely to do it again as the 10-day catches up. You're getting a lot of nice blue color here, as it's definitely a code blue situation. But I'm looking for this to try and consolidate up here and form a base and hopefully be able to go higher. It seems to be getting a little bit frothy, but you never know. Sometimes these things can take off. You're basically in an uptrend channel, so it looks okay, but I would not be surprised to see a little pullback as the 10-day catches up. Anyways, going back to the minimum volume question, the thing with minimum volume, there is no magic minimum volume, like you should always only buy stocks that trade over so many shares a day or so much in minimum daily dollar volume. It's more a function of how big of a position can you get and how easily can you move around in a stock that trades 300,000 shares a day. Now, if you have a $5,000 account, you can move around very nicely in a stock that trades 300,000 or even 100,000 shares a day. If you're running a bigger account like I do and you want to buy 10, 20, 30,000 shares of something, I want to be able to move pretty quickly, and so my requirement of having a higher average daily volume and much more liquidity is based on that need, not on some concept that there is a magic minimum volume number that you have to adhere to. So remember, that is all a function of your account size and what you can do. So when you ask me that question, what minimum daily volume do you prefer, it's kind of meaningless because it's more a function of your account size. So hopefully that explains some of it. Texas Instruments trying to move higher. The fresh market, I've noticed this one had a pocket pivot here last week. It's a little slow, but it's trying to come out of here. And if you look at it on a weekly chart, it's this big ugly pattern. Maybe it's going to pod its way back up to the highs. Who knows? But it did get this nice pocket pivot a few days ago. Anyways. Ultimate Software Group. I've been watching this one too. It's coming up. So now, this is an interesting example because it trades 281,000 shares a day, but it's $153 stock. So that's close to over 40 million in daily dollar volume. So that you only need a couple thousand shares of that, and you got a $300,000 position. So in that case, this is irrelevant, and it's more a function of the daily dollar volume for me in terms of how much money can I suck up buying this stock. So. Total System Services. Here's one on the comeback trail, big breakout. You're seeing a lot of this. These moves happened last week, and then they've been going tight sideways. So somebody says, do you have any screeners besides 85 comp on your screener? I asked because I get over 700 stocks on a MarketSmith putting in 85 comp. You might try. I also run my minimum volume screen over that, and that cuts the name down, the list down a couple hundred names. So, but I don't know why you're getting 600 because I don't think you could have that many stocks. Maybe I'm wrong, but I don't know why MarketSmith is giving that to you. But I'm not a MarketSmith user. Here's UNP. This is what I was talking about. That you're seeing the rails come right back. See how they look incredibly ugly? Here it violates the 50-day right there. That's the low, and almost comes down to the top of this pattern here, this little consolidation with a dropout low here like that, just like you had here, and it's turning back up, and I don't know if this thing rolls over again, but I'm guessing if the market goes higher, it may try to test the highs. If the market rolls over in the next 3 days or even after New Year's, this probably will come down, but we'll see. I'm not a big fan of MarketSmith anymore, and I'm actually much less of a fan of all the O'Neill products because I think their basic weakness is that they are geared to a particularly dogmatic approach to the market, which is can slim, and I don't think it applies anymore. And I've gone over this theme many times. Can slim, you want to have 4 or 5 quarters of earnings up 20%, sales up. I mean, yeah, okay, maybe in the 80s and 90s. Very few people were aware of those parameters, but everybody knows about it now, and everybody can see all the data. You've got it everywhere, so everybody sees everything all at the same time. You have no advantage, and I've talked about how when I was a broker in the early 1990s, when I started, having the daily graph books put me ahead of everybody else in terms of the information I had in that office full of brokers, and that's not the case anymore. You don't have an information advantage like you might have had back in the early 90s using a Daily Graphs book. And so I think a lot of that stuff doesn't work anymore because everybody sees it. And so you have to be a little bit more creative in thinking through the fundamental aspects of the things that you're buying. So an example would be Tesla in early 2013, thinking in terms of the thematic drivers behind that particular name, even though it didn't have any earnings at the time that it broke out, even though IBD will not tell you it's a model book stock, but when it broke out and we started picking it up, even on the Bible Gap up at 67, I think is where we put that alert out. The stock had a huge move from there, and it was a thematic move, not necessarily based on using the CanSlim formula. And I can remember at the time when we put that Bible Gap Up report out on Tesla, still flipping through some names here as I'm talking, some people would email us, well, aren't you concerned that it doesn't have the earnings growth? And it's like, yeah, you and every other sheep out there who continues to use what I think is just a dogmatic system that really doesn't apply anymore. Okay, so we looked at composite over 85. Let's look at the IPO watch list, which is one of my favorites. And probably the thing to do here is to sort it. Go to the warehouse, and we want to look at IPO watch list. Let's go. This is the new, I'm actually testing the new intraday features, which show you the intraday volume increase. So you can actually screen against all securities in the HDSI database intraday with a 15-minute delay, and it will give you stocks that are moving on volume. It'll give you stocks that are gapping up on volume. So 15 minutes into the day, you can run an update on this, and it's going to give you all those names against the list of all securities. And so far, we're working through some bugs in it, but I find it very, very useful. And this is really the last thing that I use Wanda, the institutional product from O'Neill. This is the last thing I use it for. And once I'm able to do this on HDSI, then I have no reason to have a Wanda anymore. So I think this is very key. But anyways, I want to go to, let's see if I can find it. Warehouse fields. Let's see the classic view, wherever that is. Default view. Here we go. Bingo. All right. So what I do is we're looking at my list, IPO watch list up here, and we're going to sort it by ERG. So we're going to get the best ERGs at the top. See that? And there's our ERG 293. And this is where I tell you 180 or higher. They put colors on here so you can see where the 180 is. But that's pretty much, oh, there's service now. Look at that turkey. See, that's the one that broke out, broke down, violated the 50-day moving average, but came up off the 200-day, which is probably the 10-week on the weekly, and breaks out to new highs. So you actually did have a pocket pivot right here, so that worked. Anyways, going back to the warehouse view, we can pull this up. And so we're looking at all of these IPOs in the last 2 years. And Erie Pharmaceuticals. Pocket pivot type signatures here. I don't really see anything. This doesn't really throw me. Ananta, nope. Aspirin. Notice how you have a lot of biotechs in here. There's a pocket pivot here coming up through the 10-day line, and then it pulled back. So that actually technically failed there, and now it's trying to set up again. I don't know. That doesn't really. Let me see what this thing trades. 376,000. Not really my cup of tea. Qualys. This is in the cybersecurity group. This is a thin name, but notice you had a pocket pivot breakout here, and it's continued higher. And that's one of the names in the cybersecurity group. Insys. This actually qualifies as a. Let's see, when did this thing come public? Yeah, 111. So actually, these are IPOs in the last 4 years, I believe. Trying to remember which screen I generated this from. But there's also an IPO list on HDSI that you can use. I think it's an HDSI starter, so that's one place to start if you're interested in looking at IPOs. But I think that you should always have an IPO watch list going where you're keeping track of IPOs. And there are websites that will tell you upcoming IPOs, and you can keep track of those as well. But I think it's very important to keep track of IPOs because that, to me, is the let's get into metaphor overdrive here. That's the fertile field from which future opportunities spring forth. How's that? So Somebody says, I have not transitioned to HSI yet. Well, you should. I think it's a lot cheaper. I think with the 15-minute intraday update, which you do not get with MarketSmith, I believe, I think it's, even on Wanda, I think his screening capability is 20 minutes delayed. So 15-minute delay, I would like to see him get it down to 5 or 10, but they are able to update this thing very quickly when you do the intraday update. So anyways, let's continue. We got about 20 minutes left. How far do you go back on IPO day? I go back 4 years, so you can cut that down to 1 or 2 if you want. What we're doing here is we're going to go, these are the weekly charts. We're going to go through, look at this thing. What the hell is this? Global, Gabelli Global. Okay, I'm not sure why these are in here. Oh, because I have all securities. How did that happen? Let's go. Yeah, there we go. 58.com, garbage. Acceleron Pharmaceuticals, trying to set up. Let's see what this looks like on a daily chart. I think we went through this one. Here it is. This is trying to hang along the 10-day line, no real pocket pivots here. Notice how when you pulled back hard, that was the day that the biotechs all got hit. It got some support off the lows, closed mid-range. You can see that here. And that looks kind of interesting. Erie Pharmacy, we went through these. Ambarella, there's Ambarella. You had a pocket, a 5-day pocket pivot there. So here's the 5-day concept. But notice how you cut through the 50-day, but you don't undercut, and you're going code blue here. Looks like it wants to turn out and go to new highs. And I think this move is also related to what you're seeing in GoPro. Airmark. So we got these blown up nice and big. Blackhawk we're looking at. Here's this Bluebird Bio. Somebody brought this up in the chat room, asking me, is this building a high tide flag? Which I guess is an HTF, to which my answer is HTF do I know? Little pun there. But you do get support on the biotech pullback here. You see the support off the lows of this flag, and it's at the 10-day moving average. So what do you know? I can't tell you if this is a high tide flag. It's a flag. But again, this is going back to this need to label things. So if you can call something a high tide flag, then you should get all excited, and you want to buy it till the cows come home because it's going higher and it's going to have a big move, just like the high tide flag that Syntex had in 1960 something. Okay, it's kind of irrelevant, and labeling basis to me is utter BS and totally unnecessary. So just forget about it. Look at the technical action and where you're at. So you had a big gap up. That's a viable gap. If you bought it, you're not making a lot of progress. But as it sets up here, it's moving along the 10 days. So now you're in a position for a continuation pocket pivot, which you have to keep an eye out for. So Boise Cascade Paper Company, it's acting okay. You had a pocket pivot here, and it looks like it's trying to go higher. Is this a new IPO? Let me check this. What is the symbol on that one? Let's go. Yeah, it's been out in the last couple of years, or year or so. So yeah, just doing this, for those of you who haven't been to one of these webinars before, I've done a couple of them, but you get a sense of what I'm doing with my weekly screening is I'm looking for general groups of stocks that provide me reasonable pools from which I can find, or say universes from which I can find my buy candidates and stocks that are setting up. And you don't really need to get tricky with your screens. If you get a screen with ERG over 180 or composite rating over 85, and then you look at every stock that came public over the last 2 or 3 or 4 years, then you're gonna have every name pretty much that you need to be looking at. So, and on a daily basis, if you look at what's moving on volume, that'll get you clued into where the emerging names might be. Here's Gigamon. Remember good old Gigamon? Whoops. Let's see. Gima. That's it. So on the weekly chart, it looks good on the daily, but on the weekly chart, I don't know. That doesn't really get me. That doesn't get my blood boiling. GoPro coming up. Now, interestingly here, everybody hated the stock here. You were coming down. The volume was below average, but notice how you get 1, 2, 3, what are called bingo bars, I guess. To me, they're just oversold, gray oversold bars. And once it gets there, it triggers this rally, and everybody's running into it. I think there's a lot of shorts in the stock, and they're getting their heads squeezed like pimples right now. So, Grubhub, okay, ugly duckling situation. Here's what it looks like on the weekly chart. Yeah, that doesn't look good at all, does it? I can make it look better by stretching out a little bit. But here's the IPO formation. There's where it came public, and it's trying to come around in the space. Notice you got big weekly volume. So on the weekly chart, it looks like it might be trying to turn. And if you look at this, you might be able to discern, say, 1, 2, 3 waves to the downside here on the weekly chart. So maybe this is a low. And what you're looking at here, you see how it's sitting along the 50-day moving average, and you're starting to you got a pocket pivot here coming up through the 50-day. Now you're holding tight. And again, whenever you see these V-shaped pocket pivots, in Dr. K's previous studies, he used to talk about how these were failure prone. In other words, the things would break down again. But what I noticed in this market, a V-shaped pocket pivot is actually very common. But the action that you need to key on is what happens after the V-shaped pocket pivot. Because if it's going to fail, it'll just break down. But if it's valid, then the stock will spend some time consolidating the V-shaped move off the lows. And you can see you get this oversold bingo right at the lows here. So you're getting that in the general pattern. If we shrink it, you can see how you're getting a couple of these. Now you're setting up along the 50-day moving average. That sets up the potential for a pocket pivot. Or you can simply buy the stock, use a 50-day as your stop, on the basis of the pocket pivot here. That's V-shaped, which is now consolidating normally and constructively, okay? So you get the idea on that? So that this one you can be watching. There's a couple others like this that I'm watching that we'll get to. Let's see, Grubhub, GW, that one's out the window. Great concept, but when it broke down, that was it. It also shows you how, if you're a fool, you stick to the so-called 8-week rule, because here's where it broke out of a cup with handle formation here, and it went up 20% in, I don't know, 3 weeks, and the 8-week rule means you would just give back all your gains, and then it would continue lower. So that's another rule that I think is just utter BS, and the fact that it's promoted to people, and you get these idiots who they read O'Neill's book and they think they found the Holy Grail, and they think it's real simple. And a lot of the rules, I think, are statistically deficient. I hate to say it, but that's the fact. And from my perspective and from my own research and looking at what actually does happen in the market. So, maybe it can slim is how the market used to work back in the 90s or the 80s or the 70s or the 60s. But I'm not so sure it works that well anymore. So, and primarily, as I said before, because everybody has all the data. Here's this INSYS INSY Pharmaceuticals runs up and pulls right back to the top of the base. Maybe it's viable there. At least if you bought something like this here, you have a quick reference point, such as a 20-day moving average here, as your selling point. I'm going to get through all these names, and then I'll probably do like 10, 15 minutes of questions here. Not so exciting. Kite Pharmaceutical. This is an interesting name. It's holding up tight along the 10-day. You actually did have a pocket pivot here, but I'm guessing no earnings and no EPS. Actually, let's take a look at this. This might be something to keep an eye on, actually. No real earnings to speak of. They're going to be losing money for a while. It has a fair bit of sponsorship, though, which is interesting. I mean, if you look on Bloomberg, you can see that Cap Research bought 2.3 million shares in the most recent quarter. So somebody likes this thing. And you've got a pocket pivot right here, actually here, and then again here with more volume, and it's sitting at the 10-day, and it trades on average 640,000, not that thin. So this actually in an actionable position based on the 2 pocket pivots here, because it's pretty much even with them for the most part. So that's an interesting idea. Let me write that one down. I actually have been seeing that one show up on volume screens on HGSI, or it's actually stocks move. We already looked at LifeLock, which I think should go on your watch list. Macrogenetics, can't really figure that out. A little bit ziggy-zaggy here, no real buy points except this pocket pivot here, but it's well extended from that. Marketo, I don't know, that sounds cool, but what's going on here? Let's take a look at this. Huh. I don't know. What is this name? What do these guys do? Computer Software Enterprise. They're losing money though, so I don't really know. Back to the daily chart. Michael's Companies. This has been acting pretty well. I guess based on my daughter's frequent visits to this store, maybe they're doing pretty well. She's always going to Michael's stores. And just splitzing through these. I just kind of let my eye pick things up. Here's this Qualys again, which is acting pretty well. Regulus. ServiceNow, we looked at that. Seneca trying to come back. You wonder if not the biotechs, but the oil stocks are going to start coming back. Synchrony Financial. I don't know. Here's Tableau Software. Now this is one that I thought was going to be a short, but once you have this pocket pivot, that's out the window. And if you're alert, and let's say you were trying to short this thing here, and you notice, wait a minute, this thing's a pocket pivot, and you're picking that up intraday as you're short it. And let me tell you something. If you were short this stock on this day, and you didn't turn and at least cover the position, then you're really not paying attention, because you can tell pretty early in the day whether the stock's going to have a pocket pivot. And if it does, it's out the window short term as a short sale target, and it may actually turn into a buy situation. In this case, if you did buy, turn around, if you did short it at the line, you got stopped out a buck or so up or whatever, a couple % up, you could have turned and gone long, and thing broke out on no volume, but it was a pocket pivot breakout, I believe, here. So that's a pocket pivot breakout. That's holding this little gap. The 10 days catching up. I think this thing's going to try and go higher. If the market goes higher, that's what it looks like. And, of course, you can buy it with a pretty decent reference point. I think it's about 83 something on the 10-day line here. So that it's pretty tight. Tetraphase Pharmacy. You got to love the pharmaceutical companies. I think they come up with some of the greatest names for their companies. Trinec Group been hanging in there. You had the pocket pivot back here, which we sent an alert out on. It's just hanging tight, looking like it's ready to break out. Keep in mind we got earnings coming up in January and February, I believe, for most of these stocks that we're looking at. Okay, so that's the IPO list. So we're generating some ideas here. Let's look at my buy list, my current buy list, which I hope is complete. It should be. This one, Agios, it's been moving for a while. I actually saw it down in here and never bought it. Alexion breaking down, starting to look like a late-stage base failure, actually, as it rallies up into the 50-day, and I think that's an open question. You might keep this on your list as a short sale candidate if it can't get through the 50-day line. Of course, I think the whole shorting game is going to depend on the market rolling over, and that may happen. I don't think it happens going into New Year's Day, but I think it may happen as early as Friday or early next week as we move into the new year. Now here's Apple again, so that's on my buy list. Some of these, Baidu's on my buy list because I said before it was on my short list. It broke down, found support, and now it's in a position where you could get a pocket pivot. So I want to have that on my watch list. BioMarin is hanging in there okay. It's pretty volatile. Blackhawk's doing okay. Catalent. It's somebody's asking me about CVLT. I'll get to that. I'm just going to fly through this. There's only about 50 names or so in here. Celgene bounced off the 50-day. Chipotle has been on both of my short and long lists, and it's trying to turn again, and you're getting a lot of blue in here. I don't know what's going on with this thing. Electronic Arts acts well. You had the pocket pivot off of the 10-day here. I think you had one here as well, and it's just trekking higher. My son has been all over that name, that one, and I guess Take-Two, because Take-Two makes GTA or Grand Theft Auto. Here's Exam. This is one of Ron Brown's names that he's been picking up. He had a pocket pivot here, so that was your buy point. You're extended now. Expedia had a pocket pivot here, coming up off the 20-day. You don't quite clear the 10-day, but that's holding tight. And we were looking at what other? Well, I think Expedia is the only one holding up. Facebook now is a good example of why you want to come in on the pocket pivot. And I was actually shorting into this rally, but I turned around and then went long the stock and sold into the move. You get a breakout, and the breakout here occurs on below average volume. But I would call this, if you want to draw a line across these peaks, you get a trend line breakout here on some decent volume. And that to me is a breakout right here 3 days ago. So let's blow this up. and I don't know why IBD sticks to this silly business of picking the peak over on the left side and telling you that's your buy point, because I think that's oftentimes way too far up there. In this case, I think it is, but it's holding pretty tight in here as volume is tending to dry up. But really, you can enter here on the pocket pivot, so that would have been 6 days ago. But also, if you draw a line across these peaks, you get a trend line base breakout here on heavy volume. So that's right here, this day here, the second day within this blue bar, which corresponds to this, which if you draw a line across the peaks here, that's a trend line breakout. And so that would have been a buy point too. That's much earlier than just being some robot who thinks that you pick the high over here at the left and that becomes your buy point. That, to me, that's another very silly way to handle stocks. And just, I don't know, it drives me nuts because I think a lot of people are misled, and I think it's unethical to be promoting crap that really doesn't work anymore and acting like it's some sort of gospel that you need to follow, because it's not. And I might point out that when it comes to the market, there is no gospel. There's only what's working right here, right now. And if you can't be flexible and adaptive enough to move with that, then I think you just get left behind, or you end up losing money. Now, I've been talking about how the let's see, this looks pretty ugly, right? If that's not an ugly duckling, I don't know what is. But this thing's been in a long bottoming, pattern for a while, and it's trying to come up off the lows. If you look at the weekly chart, this is Fire Eye. So let's pull this up. Whoops. What? Oh, that's because it's in my buy list. Okay. You see you're starting to get some sort of a semblance of a low in here as it's trying to come up off the bottom. And the whole group is acting well. So maybe this thing gets dragged up. So what I'm looking at here, you got a pocket pivot here, okay? Coming up through the 10-day, you could call this one the pocket pivot, or this coming up through the 50-day, off the 50-day rather. This one actually gets above. Let's blow this up so you can get a good look here. This one actually just above. It gets just above the 50-day. You're pulling in. You get another pocket pivot off of the lows here, and it's going code blue. And maybe this thing is going to turn, and everybody's short this stuff, so maybe it runs from here. And what I've noticed is the best moves have occurred in stocks coming off of lows rather than something that looks like it's set up very well. So something to keep as a trade. I think this might be tradable. I'll be looking at this on Monday. Anyways, let's continue. I'm going to get through this, and I'm going to answer some questions. Home Depot, just in Home Depot. The place was empty. We were buying my wife a bonsai tree. She's killed 10 of them already, so I guess we're shooting for number 11. But you have to admire her persistence, though. LinkedIn is going code blue, and this. If you were on the webinars last a couple weeks ago, maybe, or the week before last, I was talking about how when the market was coming down, this is something I noticed because I was trying to short LinkedIn here, and what I noticed is on that Tuesday, which I think is 7 days ago, it was coming down with the market, but the volume, the intensity of the selling wasn't there. And once the market turned, this thing turned around, and it looked viable to me based on the fact that it had pulled down to the 50-day and was holding while the market was getting very weak. And even though I was looking as a short sell, you could turn around and go long the thing. You can even buy it here on the gap up, because once you get there on this day, you're actually, if you draw a line across the tops here, you're pulling off a trend line breakout, and you can buy it there on the pocket pivot. So it's a pocket pivot, it's a trend line breakout. You got nice volume that day, and you could be in it there. And again, here, if you're some idiot using the left peak here as your buy point, then you buy this move, and they run you back in, and you're immediately underwater. Now you've got the 10-day catching up. Maybe this thing tracks sideways. I guess earnings come out in early February, I believe it is. Yeah. I'm going to get to some questions here. Hang loose, everybody. We're almost to the end here. Medivation. This is a stock that I was telling you guys way back. Maybe I can go on the weekly chart. Yeah, there was a break right there, I think it was. Was it there, or was it earlier in its life? Maybe it was back, whoa. Maybe it was back here. No, I think this was it. All I know is everybody was long the stock. This is split adjusted, but you can see it's around $20, and it goes down to around $4 or $5 pretty quickly. That was a biotech I saw people lose 80% of their account value. Let me tell you, that will shock you like nothing else. And you want to avoid that stuff. Anyways, Mercado Libre. But again, you know, there's always potential for things to happen in the stock market. The stock market is risky. There's nothing magic about it. There's no magic system you can follow that guarantees you will sidestep risk each and every time and make nothing but big money on the upside. Palo Alto Networks continue to act well. This is a pocket pivot breakout on a gap up move. It wasn't a viable gap up. The volume wasn't high enough, but it was a pocket pivot breakout from a flag. And you notice something about Palo Alto Networks. If you look on the chart, it's been a nice, nice, happy upside trend channel. You know, you can draw lines across the peaks, and this is just nice and steady. It hasn't really had a parabolic move yet, and my theory is that maybe it does eventually. So at this point, I'd be watching for pullbacks to the 10-day to buy, and should hold up above the low here. I think the low here is like 122.11 on this gap up day. If we blow this up, so the low here is 122.11. It's holding up pretty well. I think it'll push it higher into the end of the year. It'll go above 130 probably. But that's a name to keep in mind. There's Qualis, that's on my buy list. RFMD continues to just move higher. It's been another slow mover, but it's acted fine. So Sierra Wireless continuing to go higher. No buy points though. Southwest is doing fine. Spirit trying to come back. That's more of an airline-related name. There's Take-Two. It's doing fine. Taser, Tessera is another one. Trinate Group holding in tight. So we're picking up some names here that are holding tight and that look like they might want to go higher, and those are the names to focus on. Vasco Data, I talked about this last week on the webinar, I think it was last Friday, 2 Fridays ago, and this thing came off the 50-day bing with the market, and I thought it was viable on the little pullbacks into the 10-day or so, and then you have a nice move back up to the highs. I think this is another strong name in the group that will go higher. It's one of the leading names. So among the cybersecurity names that I think look good, you have VDSI, Vasco, this one, CyberArk, and Palo Alto Networks. And I think CyberArk goes higher. You know, Farron Systems, this thing's had a pocket pivot coming up through the 50-day here, or I'm sorry, the 10-day came off the 50-day here, and it's holding in tight along the 20-day. It looks like it wants to go higher. It's a thinner name, trades 445,000 shares. Anyways, and that's pretty much runs through all the stuff I'm looking at. A couple other names to keep in mind. Whoops, let's go to all securities. Now I'll answer some questions. All securities, here we go. Ryan Airlines is, I wonder if there's a filter on this. Hold on. Because I noticed some names missing. Let's try this again. There we go. Yeah, we never got to Alibaba, so, and I think there was a filter on this. Anyways, the thing I don't like about Alibaba right now is all this red, and my theory that it would hold, it should have held up along the 20-day, I think. And you got heavier volume, broke down to the 50. It's holding and getting support. The ultimate low here would be right about just below 100. I don't really like this. It's almost looking like it's bear flagging. I don't own this thing. I sold it into this breakdown right at the 20. That was my trailing stop on the position. And it held the 50-day, and I've been watching it along here, and it's just not really able to get going. So it looks like trouble. Yeah, let's go. Yeah, there was a screen on this, so I'm going to have to filter on this. Yeah, you're seeing some more names here. There's CyberArk. That looks like it wants to move. I would use any pullback here to buy it. Exam, we looked at that. I'm just flipping through this real quick. FireEye. FireEye is my ugly duckling trade. So, whoops. JD.com. Okay, this is another ugly duckling. I think you want to keep an eye on. You're getting some big volume off the lows. It's holding tight along the 10-day and the 20-day as volume dries up. You're seeing a little bit of blue here. I'd like to see the weekly bongo turn blue, but that won't happen again for at least another week. But I'd be watching this because you might get a pocket pivot in here. You got a 5-day right in here, series of 5 days right in here off the 10-day, and it looks like it's trying to hang in there. There's MasterCard. It's hanging in there. Monolithic Power, that one's holding in okay. New Link Genetics, I think I talked about this one in here a couple weeks ago in the webinar. Not really going anywhere. NXP Semiconductor, that's hanging in tight. Notice volume's drying up along the along the highs of this little formation, and you're above the 10-day and the 20-day, but this could be setting up for a pocket pivot, so you want to keep an eye on that. We did that Rackspace, Restoration Hardware. Notice how that's not going anywhere on the gap up. Second Sight Medical, I just keep watching this, but look how ugly that is. It just does not want to turn. There's Love, Spirit, Taser. We already went through these. Yeah, some of these got, here's TrueCar. This had the pocket pivot down in here, I believe. Broke down, ran up to the highs, broke down to the 50-day with the market, and then turned and is running back up. Tube Mogul, why you want to sell into new highs, because it broke down real hard on Friday. Union Pacific. These names are trying to come back, and I'm wondering if they're not viable here, but they're a little bit extended. At least UNP is above the moving averages, so it doesn't really give you a good reference point. Viva, that's a dog. Virgin America, last week's star. You know, if you could have bought it right here, and if you bought the breakout, I guess you're making some money. But my guess is you're going to see it yank in, and it should hold. Maybe it pulls back down. The 10-day catches up, and you see it pull in. But 26% in just a matter of days. You kind of have to take that, I think, in this market. Anyways. I'm going to do one other thing here. Yeah, there was a few more names up there. Other things you can do are just kind of scan down the list, you know, once you've sorted it. What I like about HSI is that all of this is in color. You see all the data items for every stock, and you can sort them and figure out what's going on. Receptos, that catches my eye. Anyways, so you're getting a sense of what we're seeing here. I wouldn't say this is, in terms of buy ideas, like a hot market, but there are some things setting up. And if you're going to play into the last 3 days of the year, assuming we get a rally, then I think those are the names to be looking at. And then you can think in terms of, you know, what's happening with some of the bigger stocks that you would expect, like BABA, to see institutional support going into year end, and it's not. So that's troubling to me, and it's probably not the place you want to be. But as is always the case, you know, it's the name that you don't think is going to have the big move that does, and you never own enough of it because of that. I probably wasted a lot of my time trying to play with BABA when it hasn't given me a big move, but we'll see what happens in the next 3 days. So I think you do want to keep an eye on it, because you might come off of here, and you are in position to have a pocket pivot off the coming up through the 10-day, and maybe that triggers a rally. But you would think that this thing is going to get some support in here. Let's go weekly chart real quick. But it's not, you know, not looking so hot even on the weekly chart. It might just need more time. Maybe it's premature, and maybe my theory that it's going to rally into year end because it's a big institutional favorite is all wet. You know. Anyways, I got some time for some questions before I sign off and enjoy the rest of my weekend. CVLT. Someone's asking about CVLT. Well, let's go to my daily chart. We'll go to all securities, and has CVL find a bottom and turning around? I'm not sure what that question means. Are you asking me, has it bottomed and is it now guaranteed to go higher? Yeah, that's kind of a dumb question, actually. I'll have to, you know, forgive my frankness, but what the hell does that mean? It doesn't mean anything. Let's go. So, has this found? How do you don't know. I mean, you can't slap a label on something and say has found a bottom and you stamp it with that. I mean, that's kind of dumb. You know, use your head a little bit here. Where are the buy points? Well, there aren't any. And where is it now? It's extended from the 200-day moving average. So, you know, if you're going to try and buy this thing, maybe the pocket pivots down in here were the place to buy. But I don't really see Commvault as anything that thrills me here. There's no buy points. If you bought it down here, you're doing great. But those were the buy points. So up here, it's up there, and that doesn't mean anything to me in terms of what the future lies, what lies in store for the future of the stock. And asking me if it's bottom, HTF, do I know? You know, I don't have a crystal ball. That's another one of those crystal ball questions. I think you have to stop thinking in terms of crystal ball type outlooks and more in terms of understanding what is going on right here, right now, in real time, and focusing on that. Because the bottom line is all you can do is operate on the signals you see in real time. Where they go, who knows? You have no idea. Unless you have a crystal ball and you're able to see the future, you have no idea. So even pondering questions like, has this bottomed and is it going higher? It's a crystal ball question, and it's just lies out of the realm of how we approach the market. Let's see. Now it's trade the trader. Well, I don't know exactly how that works here, but whatever. My daughters go to Michael's all the time too. Interesting. Somebody says, do you consider the first hour of trading amateur hour? Whoever said that is probably an amateur. So to say that the only people trading during the first hour are amateurs is an amateur statement that really reflects almost a complete ignorance of the market. Everybody's trading all the time. Institutions will buy stocks at the open. How do I know this? Because when I was at O'Neill, we would get client orders that we would be sending to our 2 seats on the New York Stock Exchange to buy stocks at the open, or even 10 minutes after the open. So, you know, and what does that matter? And I think a lot of times if you're sitting on your butt thinking that the first hour's action doesn't matter because some goofball told you that it's amateur hour, you might miss some quick moves in the morning, you know, and you're late to the party waiting another hour. So again, trying to apply a label to the first hour of trading it's moronic and has no bearing on any particular trading strategy. So somebody says, a couple of recent IPOs on my watch list. LC, we're on a daily chart. Yeah, that's kind of interesting, but kind of jagged. I'd have to look at it. Trade's pretty nice. Lending Club, yeah, we were talking about that last week, I think. Nothing really going on. No 10-day moving average just yet. Let's see. ONDK is another one. Is that Bank of the? No, that's On Deck Capital. Oh, these are these lending firms. Nothing really here. Somebody says, do you find the 20-day exponential a good reference point on a long position? I've found the moving average useful. That's why you see it on my charts. So, and you may notice if you are paying attention when you look at charts that the 20-day is often an area of support for many leading stocks. I know that it figures very heavily into the short side, and that stocks that are trending nicely to the downside will often follow the 20-day until they don't anymore. And we can look at something like if you look at this, Solar City, for example, once it breaks down, it actually follows the 10-day line, but it never gets back above the 20-day. When it starts to, now you're getting into a position where maybe the downside is pretty wrung out of the stock and it needs some time to consolidate and maybe break down again from a bear flag. But I find the 20-day moving average to be useful on the short side as well as on the long side. So. In your routine, do you find candlestick charts add to your understanding of what? No, I don't really need. I think candlestick charts look cool, but for the most part, I don't really use them. So, but I'll look at them if I'm looking at something and it puzzles me. Sometimes maybe I'll go look at a candlestick chart. Maybe it shows you something, but you don't really need them. So, anyways, any other last questions? 10:13. We've been going for 73 minutes, and that's pretty much all I have for the day. So we've got some things to keep an eye on. You know, we're looking for a rally into the end of the year. How do you play that? Probably going with big stocks like Apple. I'd like to see BABA get off its butt, but I do think you have to be alert to see what happens in the new year, because I think the situation is still in flux, and you're seeing end of the year action, which can be misleading. And I think we may see what's really happening at the beginning of the year. But I'm not going to make any judgments on that until I actually see it. Somebody says, still looking to short names like P, Splunk, Workday. Well, P is done. I finished, my downside target on that was like 20, and so it hit there a long time ago. But it's a good question in that I'm watching some of these as they rally. In fact, I probably should go through a couple of these real quickly. But again, this undercut, you establish a low here. You undercut this low. here, and then you're finding some support off of these lows. Market turns. If I'm short the same, I'm covering, I'm gone, and I'm short this thing from the gap up here. Now you're above the 200-day moving average. You're holding along the 200-day moving average, but you're getting some pocket pivots along the line here. So not clear, but I'd just be watching that. Splunk is also on my watch list here as it comes up. Notice these lows along here are some overhead resistance. You saw a little bit of it on Friday. It's holding along the 50-day. So this might become shortable, but my guess is the short side is only going to work if the market breaks down from here. It starts to run into a little bit of trouble. And that may not happen until the new year. But that's on my list. Tesla, actually, you know, if you're really shrewd, when Tesla turned, it undercut the 199.25 low over on this side here. I bet you it gets to this low over here, which is 177 and change, probably after earnings. I bet you it gaps down after earnings. So that's not till early February, though. But in any case, you undercut that low and you rally. And if you're really shrewd, and you get a sense that the market has some upside velocity, you go long the stock and play the rally up to the 200-day moving average, and that's where it's headed now. This is about 230 and change on the 200-day moving average, and maybe that's where it stops. And there's some news. It's not really going code blue because the bongo is still red, but there was some news about the Roadster having longer range, 400 miles, I guess. But the Roadster is pretty specific to that. You can look at other things like Netflix running into trouble at the 20-day. So notice, you can see how this broke down, and it's been following the 20-day. So the theory here would be that you can short it at the 20-day using that as your stop, and if it's going to head lower, it should maintain its adherence to the 20-day. So let me see if I can think of any others offhand. BITA we talked about that already. That's maybe in a shortable position. So the other thing to keep in mind here is that in some of these short sale target stocks, you are seeing the rallies into logical areas of resistance. So it tells you that maybe we're at a point where the market does come back in, and maybe that has to happen after a follow-through day, because I think the light volume on Wednesday or Friday sure sets up the potential for a follow-through day, and then that would get everybody in IBD salivating, and maybe that's the peak. I don't know, but I do think you need to keep an eye on your short sale targets. So anyways, I'd like to thank everyone for showing up. This is actually being recorded, and I'll be posting it later today. So thanks for coming, you guys. Have a great weekend, and we'll catch you next week.